right at the end coming through as well. Nigel.
Well, that's right. From the broader markets, there are a few stocks called for attention. Miso continues at lower circuits, so that stock was down another 5% in trade today. Transformers and rectifiers came out with a set of numbers. The stock got slammed, was down close to around 9%. Cupid lost its way. No much protection out there. That stock, in fact, was down close to around 8%. Hindalco, from the headline index was down, but Nalco did come in for profit, taking down 5.5%. In terms of positive news flow, you had Panisha Biotech. That was the lone ranger, up more than 10%. Positive news flow coming out there. While IDFC First Bank, trim rates out there. The street is hoping that the bank is back in terms of momentum. So that was the outperformer when you had the Nifty bank down 300 points. IDFC First Bank actually stood tall, up close to around 2%. On that note, though, we'll wrap up with news that today was a weak trading session for the Indian markets, but the hope is that maybe in the near term, we could be a little bit oversold. Wrapping up on closing bell, stay tuned. Markets Forward comes up next.
Markets crack below key levels. Nifty fails to hold 25,900, over 8 lakh crore rupees in market capitalization, wiped off on broad-based selling.
Metal stocks see heavy selling, making Nifty Metal Index the top sectoral loser today. The move followed a sharp overnight drop in the global commodity prices, triggered by a one-time annual rebalancing of fund commodity allocation.
Export-oriented textile and shrimp stocks, including Avanti Feeds, Gokaldas Exports, end lower as President Donald Trump backs at a sanctions bill proposing 500% tariff on countries, including the ones that do business with Russia. The street feared it would impact India as well.
Hello and welcome to Markets Forward on CNBC-TV18, your go-to show where we aim to get you all the key data points to gear up for the next trading session. I'm Vinny Motiwala. With me is my colleague Mangalam Malu. Mangalam, today again a day we are seeing a bit more of a fall coming in. We couldn't hold on to 25,900, 0.8% of decline for the Nifty. Even the banking index, IT, most of the sectors today were trading in the red as well.
It was a tough day for the bulls today. It was a very tough day for the bulls today because not only did Nifty break important levels, after breaking those important levels, it fell like a hot knife through butter. And if you looked at the intraday chart of the Nifty, you would see that, at any point in time, if one went short on the index, they would make money by the end of trade. And as a result of which, it was a trending day which ended at the low point. Not just that, the broader markets, your portfolios would look like more red than green today. And the markets showed you that, 2,500 stocks in the red for about 400 stocks in the green. And even the ones which were in the green were just marginally so. Again, here too, once the intersection happened, the red and the green lines started to diverge and they ended at the widest point from each other. And that tells you that there was weakness right from the word go and continued towards the end as well. No respite, and which is what would hurt. When what started out as just fear that maybe, it could be because Donald Trump's sanctions would lead to bigger tariffs on the country, etc. The street is now fearing whether that happens or not, we don't know. But in the very near term, the hopes of a resolution or trade deal coming in get pushed back. And that's exactly what played out. And then towards the end, we had some, news that impacted a lot of the capital goods stocks as well. So just to sum it up in a line, it was a tough day for the bulls.
Absolutely a tough day for the bulls, but we have an exciting lineup for you all in store on the show today. First up, we'll talk about all these important movers and shakers in the day with Vivek from the Big Wall. Then we'll break down individual stocks, specifically metal stocks, why they came under pressure, the impact of Washington's Russian oil tariff bill on Indian exporters. What does that mean? As well as a major Maharashtra boost to Balaji Amines. That is an important one in terms of the expansion plans. Last but not the least, we'll delve into which are the key important events to watch out for in tomorrow's trading session. On that note, let's go across for our first segment. We have Vivek Iyer, who's at the Big Wall, to take us through those movers and shakers of the day. Over to you, Vivek.
Well, thank you so much for that. Well, Mangalam summed it up quite perfectly. A very tough day for the bulls, and that's what it was. Advance decline ratio skewed in favor of the declines by a large margin. In terms of individual stocks, first on the list has to be Balaji Amines, one of the few names that actually stood out in the session today. Eligibility certificate coming in, some incentives, clearly the street like that. Select tire stocks did quite well in the session. Of course, cooled off quite significantly from the day's highs, but CNBC managed to end the day with some gains. And also a name like Niva Bupa, from the insurance space, that particular stock on good monthly data actually led to quite a bit of an outperformance, decent volumes there as well. But the list of losers quite long, and you did see sectoral pressure coming across most of the names. The first one, of course, has to be the capital goods stocks. The entire sector, all of the names especially in the last hour and a half. So significant selling pressure, reports indicate that there could be some Chinese competition that could be allowed to enter this particular space, and most of the names tumble anywhere between 5 to 12%. The entire IT pack, ahead of the result season, saw quite a bit of a profit booking emerge today. Names like T-Sales down almost 3%, Emphasis, Wipro, all the names, that had outperformed yesterday did see significant profit booking come about today. The metal pack, of course, one of the top laggards in the session, as a sector that's been outperforming quite significantly today, saw quite a bit of profit booking emerge here as well. Hindustan Zinc, the top laggard over there. PSU banks, again, very good operational updates coming for most of those names. But today you did see significant selling pressure. An Indian bank, that managed to actually go ahead and beat its own guidance. Actually saw a 4% downtick today. And lastly, all of the OMCs, oil marketing companies, all of them too took quite a bit of a tumble. HPCL down over 5%.
Take that point, Vivek. Thanks a lot for that. It was the metal stocks that faced particularly heavy selling today. The Nifty Metal Index emerging as the top sectoral loser. This sell-off, we understand, comes off as global commodity prices slipped sharply overnight, prompting funds to adjust their commodity weightages as part of a one-time annual rebalancing exercise. Manisha Gupta joins in with the details of what transpired overnight in the underlying commodities, and as a result of which, or the reason for which, all these stocks saw a big gash today. Manisha.
Well, yes, after making those constant highs that we've seen come in for many of those metals in last 3 and 4 months and record highs and multi-year highs, it finally seems like there is a bit of a pause in that rally right now. The last 2 trading sessions actually have seen a decline for many of those precious and base metal prices to the tune of 3 to 8% in some of them as well. There are a couple of reasons for that. One, it is the strength in US dollar index. Second, it also has to do with some profit taking after that very, very strong run up that we have seen many of these commodities. And the third important one is the increase in margins in CME that has gone up quite considerable in the last 2 times in the matter of a fortnight as well. And the third point is about the rebalancing of indexes here, which is now looking at realigning reweightages, fund allocations, and some profit taking because of that as well. So the Bloomberg Commodity Index annual rebalancing starts between January 9th to 15th, and this is the period you could be looking at volatility and some profit taking as well in many of those commodities therein. And there could be some declines that we could see in base metal prices like copper, aluminum. The net shorts have been increasing. There have been various statements from the banks as well. Citi, for one, says that the estimated outflow because of this rebalancing could be the tune of $6.8 billion just from the gold futures contracts. Society General says that net selling in silver and gold could be to the tune of $5 billion each. And then you have TD Securities saying that 13% of the open interest in COMEX silver is going to get sold. Deutsche Bank says that index-linked selling could see a nearly 2.4 million ounces of gold in sense of outflows there. Goldman Sachs is also estimating that the selling could be to the tune of $5.5 billion in gold and $5 billion in case of silver as well. Interestingly, Saxo Bank says that index rebalancing sell-off is something that you could be looking at being bought into because the structural bullishness is still on. The fundamentals have not changed, whether it's about shortage, underinvestment in case of mines, the deficit that most of the metals are looking at, the geopolitical tensions, the tariffs, etc. All of that is still there, but there was a long due or profit taking that was anticipated in many of these metals, and that's exactly what we perhaps seem to be getting in right now. Interestingly, it also is about the US non-farm payroll data that comes in tomorrow. So ahead of that, there is some more choppiness that you can expect.
Thanks so much for that, Manisha. But let's take the discussion forward now. And we're joined by our experts for today. We have market expert Neeraj Diwan as well as Richard Jain of Motilal Oswal Financial Services joining us right now. Neeraj as well as Richard, thank you so much for joining in. Neeraj, your thoughts first in terms of the capital goods space today as well as the metals pack. We did hear Manisha right now talking about obviously the rebalancing factor that comes in, and which is why we're seeing a bit of a fall today coming in for the metals pack. But even capital goods today, on the basis of some sources and news flows coming in, we're seeing a sharp fall there. Your thoughts on both these sectors?
Yeah, good afternoon. First, to talk about the capital goods space. If you see capital growth, power-related space, which anyway has been under pressure for the last 1 year or so, or maybe a little more. The stocks have anyway been consolidating because of the earnings not picking up. Last 3-4 quarters, earnings have not picked up as far as capital goods is concerned. And this news that has come today, I think it's too early to react on that news. Because let's see what kind of competition are we talking about, what subsector, whether it's power, engineering, infrastructure. We need to first have a look at what subsectors can impact it and what sort of competition can come their way. So let's not be in a hurry to react on that. I think the stocks which have been consolidating because of poor earnings or poor earning growth. What is important to see is whether third quarter earnings are better or not for them. Because third quarter and fourth quarter are normally the most important. So let's wait and see third quarter numbers and then see how this news can impact. So what will be important to see would be the earnings performance of this quarter and then take a call from there. And
All right.
second, yeah.
You go ahead. Go ahead. You were speaking.
Yeah, second, you were saying about the metals, the kind of correction we've seen in metals, whether it's aluminum, copper, zinc, silver. I think the kind of demand supply which is there right now, the kind of metal strength which is there globally, I think will stay. But there'll be bouts of correction because recently in the last 2-3 weeks we've seen a good move. Whether it's copper, aluminum, stocks have really gone up a lot. Metals prices have gone up a lot. So after this kind of exuberance, some correction will definitely happen. Some profit taking will definitely happen. But I think this is a healthy correction. If this happens and you get some more correction, I think there'll be buying opportunities coming one way because I think still there is a lot of strength when you talk about medium to long term as far as non-ferrous metals are concerned.
Right. Ruchit, just hang in there. We'll come back to you just to close the loop on the reasons why the market fell, and then obviously we'll ask you about the levels, etc., that one should look at. But one of the bigger reasons also for a lot of these export-oriented textile and shrimp companies, etc., including the likes of Gokaldas Exports, Avanti Feeds, all of them on account of a sanctions bill, the possibility of a sanctions bill which proposes a 500% tariff on countries that continue doing business with Russia, which includes the likes of India and China. Hormaz joins in with more details. Hormaz.
There's pressure clearly on all of these names, be it the textile names or the shrimp feed exporters. And to tell you more is, of course, most of these companies, as we have been reporting all through these last 9 months, is the fact that they get almost 50 to 70% of their revenues from the US market. So be it Gokaldas, be it Avanti Feeds, or be it the likes of other names like KPR Mills or even Apex Frozen, all of them seeing losses of anywhere between 5 to 9% in today's session. Gokaldas at one point was down even 12%, and it has almost now more than halved from its 52-week high levels. Of course, today's big news was the approval given by Donald Trump to the Russia sanctions bill, and that bill allows him the power to impose tariffs of up to 500% on companies that are still buying Russian oil or dealing with Russia. That is subjective, of course, country by country basis. Of course, you need to be aware of the fact that this bill has just been given approval by Donald Trump. It needs to be approved by the Congress. It needs to be passed in both the houses, and then it could transform into law. So that is something that needs to be accounted for. Of course, there is certainly fear on the street with regards to this, but the one thing that needs to be noted is that barring Gokaldas, most of the shares that fell, they fell on insignificant volumes. They were not significantly higher in comparison to either their 10-day or their 20-day average. So that needs to be taken into account as well. And the third quarter results will be the other important factor to watch out for, especially considering the fact that this will be the first full quarter of the 50% tariffs that took effect towards late August. So that impact will be seen on these companies. So it will be interesting to see the commentary that you get from these companies at the end of the quarter, and of course on the road ahead on this bill as well.
All right, take that point, Hormaz. Thanks a lot for that. Let's get back to Ruchit then. Ruchit, it was a knife through hot butter. That's what the market was towards the end of trade, at least. What are the levels? I mean, what should one look at? Because now, intuitively, one thinks that the earlier resistance of 25,700, 25,750 would act as support now that we're slightly over it and we've broken below important support zones too. Would you concur?
Yes, hi, very good afternoon. Well, since the first week of October, in this entire journey where we have traded with either sideways bias or positive bias, the 50-day MA has actually acted as a good support on every decline, and the 50-day MA was around 25,900 now, and we have ended slightly below that. So I think the follow-up move would be very important tomorrow. Although looking at the market breadth which was there today, it seems that we could see a breakdown of this 50-day MA, and of course a follow-up move tomorrow as well. So and tomorrow being a weekly close, it would be very important to see. And if we get a weekly close below the 25,900, I think that would confirm start of a corrective phase after this entire up move. So on the corrections, 25,700, as you rightly mentioned, which were the previous resistance levels, that would be the first support levels to watch out for. And if that is not held, then I think 25,500, 25,400 would get opened up. So I think tomorrow's Friday close would be very important to watch. Today's market action certainly is not good, considering that 25,900 has been breached on the closing basis as well.
Okay, tomorrow's close is going to be key to watch out for in terms of levels. Surely we'll be keeping an eye out on that. But on that note, let's move on to the next stock, which was some bit of a bright spot in today's trading session, and that is the shares of the chemical manufacturer Balaji Amines that surged over 10% today in the trading session. And the firm has actually received an eligibility certificate from the Maharashtra government for its unit expansion under the mega project scheme. Let's go across to Sonal to get more details on this one. Sonal, over to you.
Well, yes, Balaji Amines is bucking the trend. The stock is up around 12%. It is on the back of a subsidy that the company has received. It's a certification for one of their units, which is under the mega projects by Maharashtra government. And that is where they have been made eligible for a subsidy of 258 crore rupees. Now, that's a big number. Additionally, it will also be exempt from payment of stamp duty for a period of 7 years, starting 2024 till 2030. But of course, it is basis the point that around 50, it is to the extent of 50% of the state GST taxes payable on sale of products by Balaji Amines. Now, this is something which was expected by the management. In their Q2 con call, they did indicate that there is an expectation of a subsidy for their subsidiary, Balaji Specialty Chemicals, where they are undertaking a capex of 750 crore rupees. So, if they are getting 1/3 of it as a subsidy, that's a big number. The expansion is something which is around a lot of products. It will come up for you on the screen: EDTA, sodium cyanide, EDTA 2Na, hydrogen cyanide. So these are some products they will be manufacturing under this subsidiary, out of which Unit 1 of the EDT products will be commissioned next year this year in September, and the next one will be in December. They expect improvement in operating performance once all these projects come on stream. That is not it actually. They do have a DME plant at Unit 4, which is to be commissioned in FY26 itself. There's another expansion that they are planning in FY27. So all of them, if they come together, this will improve operating performance. Plus, they've also gotten a subsidy approval. So this is positive. Anyway, most of their projects were to be funded by internal accrual. So this is just additional money coming through for their balance sheet. So that is a positive. There is fundamental news in Balaji Amines, but even alkyl amines, which is the direct peer, is surging in trade on the back of this move that we've seen for Balaji Amines.
Sonal, thanks a lot for that. Neeraj, what's your thought on the chemical space? A lot of people increasingly getting bullish on it.
Yeah, I know. Again, you'll have to put two parts to that. One is which have a lot of export, and one is which is less of export and more of domestic. So I think Balaji Mines will form the category where the export is quite less. I think 10, 20, 10, 15%. So I think these kind of stocks are better placed, which are agrochemical, pharmaceutical, domestic consumption. So I think there one can take a view or medium to long term. Also, I think some positive momentum should continue and should come because the stocks have corrected a lot in the last couple of years. So there is definitely opportunity there. As far as stocks which have more exposure to exports, 30, 40%, 50%, I think there one can still be a little more cautious because we don't know what is going to happen as far as trade is concerned. There's still a lot of, it's not clear at all. So stable stocks which are more of domestic consumption.
Right. Thanks so much for that point there, Neeraj. But Neeraj as well as Richard, thank you so much for joining us this evening on the show, as always. But on that note, we're going to slip into a very short break. After the break, we'll get you the top corporate voices, which are the important events to watch out for in tomorrow's trading session as well.
This is Markets Forward, a tough day for the bulls, but a lot of corporate action that took place today as well. And we got to a few of them on our channel. United Breweries, that's the one that joined us today. And they've launched a new beer, Kingfisher Smooth. So that's a brand extension that they've done in their main brand. They said that they expect the beer category to grow between 5 to 6% in 2026 after a sub 5% growth, a poor 2025. They said the premium segment, which grew over 20% last year, in 2025 that is, will continue to drive growth, while Kingfisher Smooth, their new offering, which is now in one state, will be rolled out nationwide in the next 12 months and will be their biggest bet yet.
The next management that we had on the channel today, IRB Infra's management, they said that the toll collections in the third quarter has positively surprised the company. It expects the toll operators transfer 17 road segments to add around 750 crore rupees in toll revenues. With this, IRB said that its asset base is moving closer to 95,000 crore rupees mark and is on track to scale up to 1.3 lakh crore over time.
And business services provider CMS Info Systems expecting the deal with SEBI, or rather SBI, to add about 500 crore rupees in the next 10 years in incremental top line, with a 30 to 40% revenue upside over the next couple of years on that itself. Their services business will continue to compound at 12% over the next few years.
And before we wrap up this edition of Markets Forward, let's go across to Upasna to tell us which are the important events to watch out for in tomorrow's trading session. Over to you, Upasna.
Well, first up, let us look at the global economic cues in US. Unemployment rate for the month of December and even non-farm payrolls data will be out. India, foreign exchange reserves, bank loan and deposit growth data is something we'll be closely watching out for. Now, coming to corporate action, IEX will be in focus as the market coupling order case is scheduled for tomorrow, the next hearing. And in terms of results, important results for tomorrow, we'll be tracking IRDA and Tejas Networks as well. Now, on the IPO front, Bharat Coking Coal, which is a wholly owned subsidiary of Coal India, opens for subscription tomorrow. Now, let us look at some of the key other important events. Now, Trump and oil executives to meet to talk about Venezuela. We'll be keeping a track of that as well. And AMFI media conference call is scheduled for tomorrow to discuss mutual fund industry's monthly data for the month of December 2025. And lastly, India and Europe crucial FTA talks, they end tomorrow in Brussels. So we'll be keeping a track of that as well and any key important update that comes out from this meet. So all in all, looks like quite a power-packed day tomorrow.
A power-packed day tomorrow indeed, Upasna. Thank you so much for that. It's Friday tomorrow too. With that, we'll wrap up on this edition of Markets Forward. Stay tuned. More news and updates on the other side.